So welcome everybody to tonight's Zoom at 8. My name is Julianne Peterson, and I welcome all of you to tonight's special night as we hear from Sandhya, how her successes, where she started, and now where her multifamily is taking her from rags to riches. No, just kidding. But we're really excited to hear from you, and also want to make sure that you guys know that Julie is from Old Capital Lending, and we are a premier provider of debt. Now remember, your lender is your biggest partner. So I want the opportunity to provide the debt for something that you're looking at and possibly taking down. All I need is your T12 and your rent roll, maybe an OM if it's not off market. And then, we can give you an indication and help you. We just don't do loans here. We provide Zoom at 8 in a place that we can help you find sponsors, to help you find property managers, insurance brokers. Every teammate that you have, you can find here at Zoom at 8. And by the way, we have closed 7 deals. And we decided earlier, when you weren't here, that Zoom at 8, it needs the number 8 next. So maybe you're going to be the golden birthday of Zoom at 8, getting the 8th deal done. So I'm really excited about that. And I know there's lots of relationships being built here at Zoom at 8. All right, so without further ado, I am so pleased and excited. I think you've heard me say that a couple times before on Zoom at 8, but what I love about our speaker tonight is I had my eyes on her probably a couple years ago, and I've just watched her blossom. Sandhya has come alive over the last 2 years in multifamily, and some of me says, dang it, I'm behind her. How do I catch up? And I want to encourage all of you to listen to her story and to maybe put yourself in her shoes. Maybe there's some things that are very similar in your life to hers, and watching her make it all possible, putting all of the deals together, how she did it, what are the decisions that she made for herself, for her family, for her investors. She is an experience in all aspects of multifamily, including underwriting, analysis, and raising capital to close syndication deals without delays. And Sandhya really, she's in everything. She pours her heart and soul into everything. She's been successful asset managing with NOI improvement of $150,000 in 12 months. Not easy, which gave her over $2 million increase. She's worked for 12 years for Texas Instruments. She's managed $80 million in projects with revenues in excess of 28 million. So without further ado, I do want you all to make sure you turn on your view up on the right side of your screen and bring it to speaker view. So now you can see who is speaking. Hopefully I'm there. You can see me, and I want to turn it over to Sandhya. I want to thank you so much for taking time out of your busy schedule to join us here at Zoom at 8 with Old Capital. So how are you tonight?
I'm doing great, and it's so exciting to be here. You were my lender not so long ago, so it's very thrilling to be invited to be a speaker at your meetup. So thank you very much for the opportunity, and thank you so much for everyone else who's taking the time on their Tuesday evening to be here instead. So I really appreciate it, and hopefully I can share my story with you and you can get something out of it. So I'm going to share screen, go through a little presentation, but feel free to interrupt me during or after with questions. And do we have about 15-20 minutes to do this?
You have 30 minutes.
Okay. I'm going to speed it up so you have time for the questions, which I think is the most important part.
Super. Thank you.
See. Is it sharing screen at all?
Yep.
Okay. Investing in apartments. Is that what it shows?
I don't see it yet.
Okay, well then I must not have pressed the right share screen. So let me try again. Share screen and PowerPoint.
There you go. We're getting there.
Awesome.
All right. Open it up. There you go. Perfect.
So this is my agenda. These are some of the main points that Julie wanted me to cover, and I can certainly add to it as you get questions. But I always start with a disclaimer to say that everything I say is basically my opinion, and I'm not a professional in any capacity to advise you on what you should do with your money, but I can share my experience and hopefully you'll learn from it. I'm going to talk a little bit about how I got started, what is my experience with mentoring programs and masterminds, how important are relationships, the team members, share some of the mistakes I made. So hopefully you'll make new ones and not the same ones that I made, and things I see people doing and what I would like to caution you about. Passive versus active investing, how I do both, and what are my priorities there, and balance of work life, some of my hobbies, and the impact RE has had on my family, and what are some things I like and dislike about it, as well as some words of wisdom. So not a financial advisor, etc. You can just read this briefly. Always be cautious about investing. And yes, any investment carries a lot of risk with it, and you could lose your entire money.
And I hope you're going to talk about that tonight.
Going to talk about bad deals and good deals, yes.
Perfect.
This is my inspiration. This is what got me started is I want to find a way to make money while I sleep. And so it's mailbox money, passive income, but I didn't want it to be all from the stock market. I always wanted to have something to do with real estate. And there were reasons that I went to multifamily instead of single family. So I grew up with highly educated parents, but back in India in middle class. And we were fine, except that when I try to bring that currency over here to the US, it amounts to about $60 a month. So from a US standpoint, I was not very well off at all. And I wanted to come here to college. I wanted to live here, etc. So as a teenager, my interests were varied and had very little to do with my academics. And I had to kind of force myself and say, how badly do I want to come here? And that's what forced me to finally spend about a year very seriously going through my academics, making very good test scores so I could land a scholarship to afford college here. I came to Dallas to SMU, Southern Methodist University, which is a private college at a tuition of $20,000 a year. And with that degree, I got a job immediately in Texas Instruments. And they were kind enough to send me back for a business degree because I realized very quickly that all the business folks were making decisions at work. And as a technical person, I still didn't want to be told what to do all the time. I wanted to understand how they make their decisions. So with that MBA experience, I got into the stock market. And so now I have over 2 decades of experience in the stock market. Of course, I had some wins and losses, et cetera, but overall, I would say I was more positive than negative in my end result with the stock market. And I paid a lot in taxes. So I knew that once I read the Rich Dad Poor Dad book and the cash flow quadrant, I somehow had to go from, being a paid employee to also add an investment or business to my portfolio so that I reduce my tax burden. And that's what brought me to real estate. And today where I'm at, I'm a general partner in 4 deals and I'm a limited partner in 17 deals. So I still started out doing a lot of passive deals and then got into the active side. So apartments, meaning large multifamily, which is at least 70 plus doors versus single family, right? Whenever I did a financial analysis and not being a very handy person to go fix, a toilet leak in the middle of, a Thanksgiving break, for example, I didn't want to deal with the 4 T's, which is tenants, toilets, trash, and termites. And that's what led me to avoid single family. I just didn't see enough margins for me to have to do that kind of work. I think a handyman can easily fool me into spending hundreds, if not thousands of dollars on a repair. And I just didn't feel that that was my way to go. So I went from zero real estate straight into multifamily. And, all of these things about the NOI and forced depreciation that many of you might already know is what led me to it. Another big factor was that it was non-recourse debt. And certainly Julie will help you with that when you are ready to get a deal, but not having to sign a bank mortgage loan where they can come after your personal property. That's what's a recourse loan, like I signed for my own personal residence. That's not something I wanted to do for additional properties, which is why another big reason I stayed away from single family rentals. I just felt it was easier for me to manage a stock portfolio online, trade with E-Trade, Ameritrade, et cetera. That was just easier. So I went from zero to multifamily. So one of the questions I had to answer was, what's in a mentoring program and why would you want to join one? And the way to start is, what are your SMART goals, right? Specific, measurable, attainable, real relevant, and some kind of time sensitivity, right? So if you say, in a year's time, I want to syndicate a deal of this size in this market with this many partners, et cetera, right? That's a pretty specific goal. And then you can, from that, go on and say, will this mentoring program get me there, right? You kind of have to do that analysis. So for me, I was based in Dallas. I've lived here over 30 years. So I really wanted a mentoring program where most of the people and the focus was the Dallas market. And that's how I found my mentoring program. I attend a weekend event, and I'm part of the Brad Sumrock mentoring program. And Old Capital is a very popular lender for us, as is Ramey King is another of our popular vendors for insurance, et cetera. So a lot of these folks here come and support our events like the bus tours and other things that Brad does. So you automatically get a network of people here. You have your partners and support system to do it. And I needed that because remember, I had zero real estate background. I wasn't someone who was already in the business doing smaller multifamily. I was going from zero. But here's the thing, right, about mentorship programs. You do spend a lot of money on them. So if you're not ready to commit your time to it, you're not going to get much out of it. And then you're going to get frustrated. If you have a really busy job, you're not able to commit time to this learning. You have to watch a lot of videos, get up to speed on the terms, etc. Then you have to take the time to network and, you have to put in the work. So somewhere in your schedule, you have to find that time. And you have to put into your mindset that, okay, for the first 3 to 6 months, I'm going to be in a learning mode. I'm going to give it my all. And then you'll start seeing results. And, I put this thing about don't let shiny objects distract you, because there's people out there doing self-storage or mobile home parks and I don't know, new construction, etc. So my focus is multifamily, which is existing buildings that are stabilized and cash flowing, right? And I've defined my market also, which is Dallas, Fort Worth. So be very specific of what you want and then talk to people already in these mentoring programs to see if that's going to get you your goal. So my SMART goal in January 2019, when I got started, is that in 12 months, I'm going to sponsor at least one deal in DFW that is over 60 doors. I'll learn the process of acquisition, raise capital, and do hands-on asset management because I really wanted to learn all the pieces. I didn't want to stick to just one piece and never learn the other. There are a lot of people who just want to keep raising capital. They don't want to stay the next 5 years with the property to learn asset management. In my case, I wanted to know all of it and do all of it, at least on a couple of deals, and then see, do I want to just pick one area as my favorite or expertise and not do the rest? But at least starting out, I wanted to know all of it from A to Z. So this was my goal, and this is my result. So in 2019, I was able to co-sponsor 2 deals. What does that mean? I piggyback off the efforts and expertise of other people who have done this before me so that the mistakes are fewer. And I certainly didn't have the confidence as a newbie with no real estate background to run my own deal. So you have to decide what your comfort level is. And remember that syndications involve other people's money. They involve large amounts of debt. And for me, this was my comfort level, is to make sure I have team members who know this and I'll be like their worker bee. So if you see the first picture, it has my 2 partners. You can barely see me standing next to my super tall partner there. But they had done deals before and they were both located out of state. So I could add value by running every time something happened, right? We have a vendor coming in to fix toilets or, do LED upgrades or do a new leasing office. Well, they're out of state. They'll direct me. They'll say what needs to be done, but I'll show up every time. And I learned a tremendous amount from it. So in that sense, I got more than my money's worth. Where else do you get this opportunity, right? So I would never have met these guys unless I had joined this mentoring program. So one of them, Dan Breezy on the left, is a professional snowboarder, super athlete. There's no way I would have met him if I wasn't part of this program. So right there, it paid for itself. The second deal, both of these are pictures of Northridge Court, but the second deal, again, I wanted my name tied to a larger property to be on the Fannie loan for that. And I trusted two other sponsors who've done a decent job of this deal, but we struggled last year through COVID. So I kind of understood what are all your different avenues when you have delinquencies and people taking advantage of the system. How can you work through that? So both were really excellent eye-opening projects for me last year. And both projects actually are for sale now. And so all the passive investors from both these projects are going to get all their money back. And even the second deal, which hasn't done quite as amazingly well, they're still going to meet all the projections made initially. They said in 5 years, you'll get 100% back. In 2 years, they're going to get 40% back. So it kind of matches that trend. But this first deal, Northridge Court, it's just crazy done so well. It's insanely very, very successful deal as my first deal. And this wouldn't have happened. I certainly wouldn't have had the confidence to run a property like this without experienced partners. So it's important to define what you know and what you need from partners. Another result, lead sponsor in one deal in 2020. I was initially not so excited about this deal because I had heard from the previous owner some of the struggles he had had with it. And this is the deal that Julie of Old Capital helped us with. So the two other lead sponsors who had initially underwritten this deal, et cetera, through a coach, they brought it to me and said, we need someone to sign the loan and help us a little bit with getting started as the local person, because these two other sponsors also were out of state. But I ended up slowly warming up to the deal and finally signing, and I'm on this property at least every week because this is another amazing learning experience. So when we turn this property around quite a bit more by next year, it's going to be a huge success story because this is one of the harder, toughest properties that is kind of well known in our circles as a property that if you turn around, it's going to have amazing results. It's just 10 minutes from downtown Dallas. It's in Bishop Arts District, which is a good area. But the best part is we bought it at $80K per door last year, and it's a comp property has already recently sold for $115 per door. So, you know, this market is going crazy. So that's probably, I think, the most comforting part.
And this one was an assumption.
It's an assumption. So
a lot of assumptions don't work. So this was great when we found this that would work with an assumption. So talk a little bit about that. How was, just so people, because I know that assumptions are going to be continuing to show up. How was that process for you?
So when you underwrite a deal, even though Wayne and Nate, who are my partners in this deal, had underwritten it first, I also independently did the underwriting, and I underwrote it both ways, which is let me take on this loan assumption, or let's go ahead and pay off the loan. It's yield maintenance with Fannie, so the payoff is quite high. It's like 2 million plus. And so we said, okay, what do we have to do to buy it free and clear? And the assumption actually worked. It also worked in multiple ways in that when it's a loan assumption, you only deal with this authorized Fannie, what do you want to call them?
Servicer.
So we didn't have to deal as much with Fannie. So we were able to close this on time in December of 2020. And so that was a big part of why a lot of investors were also keen when they realized in December that you're actually going to close this deal. I could actually get my tax break here with the depreciation this year. So the investors came pouring in and we were actually oversubscribed. So that was another positive. But in your underwriting assumptions, you know, the higher interest rate you're paying for the loan assumption, the unique thing about this deal was that we still got an 80% LTV, which is kind of crazy. Because usually you think with a loan assumption, you only get 60, 65% LTV, so you have to raise a lot more money. But this one, we got 80% LTV. So it was, okay, the only negative, so to speak, with the assumption was, okay, it's a higher interest rate. So if you put it in your spreadsheet and it works, and you can get the rents, the rent premiums, hey, you're there. So Thank you so much for that, Julie.
Yeah, that was a great transaction. What
Yeah.
was it, like 2 or 3 days before the end of the year? So that was
Yeah.
that
I
was
think we had
fantastic.
3 business days before the end of the year. So
Yeah.
that was fantastic. So that's my third deal, but in which I'm a very active lead sponsor. I'm there at least once a week, kind of, and I love it. So now I'll move on to a mastermind, right? Why would you want to join a mastermind? They usually have a high fee. And again, you need to have your SMART goal defined. So in my case, I wanted to start acquiring slightly nicer and newer properties and still stick with DFW. And I wanted the value add to be a little bit simpler, like not be too much of a heavy lift and still make the same kind of returns, right? I need to be able to 2x my investors' return within 5 years kind of deal. So my goal was still about the same, just on a nicer property. And so this picture shows you a recent Sumrock bus tour that happened in April. And one of the things that my mentor does is he takes us on periodic student bus tours where we get to see properties owned by students as well as properties listed for sale. And there were 2 properties listed for sale. You can see 6 buses worth of people who toured this property. And I looked at this property, and then there was a second property that our mentor said, Brad said, I'm going to go buy this property, he said, on the second property that was listed. So I said, I'm not wasting another minute on that property because I know Brad's going to get it. So I went after this property. And I wouldn't have had the confidence and the mindset to do it if it weren't for the mastermind also by Brad. So Brad has a millionaire mastermind that I joined in 2021, and it helped me go after a bigger property. And the biggest thing I needed when I went after shall we say, a $20 million property versus a $10 million property, the biggest difference for me is being able to raise that larger amount of capital, to have partners who can bring in that kind of capital instead of having a dozen people on a deal, each one raising $500,000, 1 million. I needed partners who could do it. So this was my mastermind result. And it's a bit of emphasis on the relationship as well. So I did acquire that property. 2 weeks ago, we closed on it. In the background is a picture of it. I found my capital raise partners through this mastermind, and I had something to offer to them. They did not have any prior experience in multifamily, but they could raise capital. I had all the experience and I could raise some capital, but not significant amount to fully close this deal without their help. So we complemented our skills, and that's very important. And then this partner here holding my face on that ladder, Carrie, she's a good friend of mine. We've known each other again through this mentoring program for the last 2 years. And together we had been touring properties in this particular area. So I think we had toured about 6 of the comp properties together. For this subject property. So when this listed for sale, I was like, okay, this is a no-brainer. We need to go after it, Carrie. And so Carrie and I, we already had the relationship with a broker, and I think that was a big piece of it. But several different pieces came together for us to get awarded this deal. There were other buyers who owned 10,000 plus doors who also bid on this property, is what we heard later. So it's a relationship business, and knowing what we were going to do and being strong with the business plan and going in with a strong offer is what helped us get this deal. What are some mistakes I have made? So in my initial year, 2019, I got into a lot of passive deals. And the biggest mistake I made was to invest passively with someone without doing my homework or due diligence. I trusted someone who looked really perfect on social media. In other words, have you ever seen anyone say, I really suck at this, but you should still invest with me? No, they make it seem like they are the greatest. I can do this. I can save the world. I can turn anything into a profitable business and make you tons of money. And so I believed all of that propaganda because I really wanted to establish a strong relationship with local people in my Dallas area with a strong construction background. So for that, I was willing to go invest in their deal, see how they went about it, and have a strong connection for future opportunities. That was my goal going into this. And what happened was, even though they had a strong construction management background, that's not the same as comprehensive asset management, right? To be able to look at the financials fully, to do your due diligence beyond the physical due diligence, to do lease audits, financials, address delinquencies, etc. Like when COVID struck last year, we stopped all capital projects, right? We stopped all our spending and held on to our cash. during the first, second, like since March to about July, August of 2020, when COVID was at its peak, we just, cut back on all expenses except the ones that were essential. This project, on the other hand, in which I invested passively with this construction manager, the difference was that this is how he makes money, is by getting all these construction projects awarded to his company. So what happened was, just kept spending millions of dollars. Imagine exterior paint on a portfolio of 1,000 doors. How expensive is that project? Imagine doing full interior upgrades to the tune of $7,000, $8,000 per door on hundreds of doors while your delinquency is rising. So the lack of asset management experience and the need to make money for the construction company. So those are things I need to look at more closely. So when you're given your private placement memorandum as a passive investor, read it closely for disclaimers. Do these syndicators, anybody on the GP team, go ahead and make a lot of money on this project, regardless of how well the project performs, right? Because their construction management is getting money. Their, property management is getting money, as an example, right? So whether the deal performs or not, the syndicator is still making a lot of money. So that's a red flag for people to remember, because what they did was they spent all this money March through June, and then in July they made a capital call. We all got investor emails to contribute to this capital call. And then when they realized that our shares were going to get diluted, they made it separately as a member loan. So that's why I say, before you invest or partner with someone as a GP, before you agree to raise capital for someone, before you invest passively with someone, get a list of all their deals and ask for a passive investor from each separate deal as a reference. And say, I need to talk to these people, just like you would with a contractor before you do a remodel in your house, right? You talk to people for references. Why would you invest 50K with someone without doing this due diligence? So that's my biggest free advice from my mistake that I can give you. Passive versus active, right? Now that I've made this mistake, I've developed a very detailed checklist to vet my sponsors before I invest passively. And so far, I have not invested twice with the same operator yet, even though I'm in 17 separate deals to date. I'm going to stick to my DFW market because I know my neighborhoods. And I'm going to have to ask about who's your property management company in the deal and what experience do they have in that local market. Because depending on which judge you go to within a county, you might get your eviction granted or not granted, because the CDC is still controlling us on that front. And we only want to evict the tenants who are not willing to make a payment plan or who are not willing to do the Texas rent relief or your state's rent relief program. They don't want to sign any paperwork. They just want to take advantage of the system. We definitely want to be able to evict such tenants, and they don't allow you to do that in certain counties. So you need to have a property management company well-established who knows the judges and who knows how are they landlord friendly or resident friendly, okay? That's very important. On the active side, right, I still like to underwrite a deal independently, regardless of what someone brings a deal to me. I take the T12 and I do my own analysis. And that's important for me to feel comfortable with signing a loan and sticking to a deal and raising, capital, et cetera, or asset managing it. A strong relationship with a local property management company is crucial. And I don't like to do too many deals in a short amount of time because I am a hands-on asset manager. That doesn't give me enough work-life balance. If I have 6 deals for which I have to asset manage simultaneously, it's going to be worse than the corporate rat race in terms of the hours. So again, figure out what works for you and only commit to about 70 to 80% of what you think your max capacity is, because guess what? It's easy to get overloaded. In terms of hobbies and lifestyles and my why, I still love the stock market. I still do that. Community involvement is really big for me. So one of the things you see is someone holding turkey. So last year, as part of our resident activities, we gave every resident like a huge, almost 15-pound turkey the Friday before Thanksgiving. So it saved them the cost of the most expensive part of their Thanksgiving meal. And that's why in that property, which has done extraordinarily well, Northridge Court, we only had one tenant we had to evict out of 86 that were fully occupied. Almost everyone else worked with us on either a payment plan or applied for assistance from local and statewide authorities that were able to provide the rent relief. So community involvement in every one of our properties is important. We're doing a back to school school supplies drive. We did a Easter egg hunt a few months ago at Cedar Square, actually. So that's very important to me. And then I'm very passionate about math and financial literacy. So one of the things I do is I tutor a lot of kids for free to teach them more about math, not as something you need to learn to do calculus problems, but as how it makes you make smart financial choices with your everyday shopping and with everyday purchases you'll have to do for the rest of your life. So that's very important to me. So, and then Julie said, share some wisdom. So this is one of the biggest pieces of wisdom I can tell you. And, you know, this is for all of us, right? Sometimes you might think, oh, I'm such a mess and have all these negative self-talk happening. And what you don't realize is really the lives you have touched and the people you have helped, all the love you've given freely to people, the memories you've made with them. And so don't forget the whole picture instead of just focusing on some little thing that went wrong, or you felt like someone else next to you was so much more supposedly successful than you. Don't let that bother you. And then things that, you know, make a strong first impression with people, right? Being on time. I almost was late. I was like, okay, for this meeting, right? You want to be on time. So when I struggled with Zoom, I'm like, oh, what's going on? Should I started this 10 minutes ago, maybe, right? So making an effort, your energy and your attitude, it makes a very big first impression. So as you try to build relationships with people, focus on what's in it for them, not just what's in it for you. So start with how can I help you? And then this is where I'm looking for assistance. Being coachable is about, you know, having more of a growth mindset than a fixed mindset. And it's easy to say because we hear it all the time, but what does that really mean? It means you got to let go of some beliefs and be open to really trying a different way of doing something, even if you've always done it a certain way. So that's another one. And then this is my big one. So I love this book called Atomic Habits. And this is it. So if you're into math, you will see that the incremental effect of one positive thing done consistently over time is huge, is very huge progress. Like for me, health has always been a struggle. I'll stay healthy, eat healthy, work out for a few days, and then I'll drop off, right? So I need to get back on the bandwagon. So today, maybe I don't have an hour to work out, but can I do at least 10-minute intervals in between meetings and find those 10 minutes, right? That's just an example, but one small consistent thing you do every day can have a huge effect in a year's time. And yeah, this is a big one, right? Stay on your lane, stay on your track. Don't worry about the progress someone else might be making at 10x your speed. That's okay. If you look at other people who started out in 2019 compared to me, there's probably many who've done 10 times the number of deals as me. Doesn't matter. This is the pace at which I'm comfortable. This is what's right for me and my family. Couple of deals a year is plenty, right? You got to do what makes sense for you. Other people's, you know, progress doesn't really affect you. And yeah, a lot of times, this is another one that I like is, you know, people don't see all the struggles that we go through, right? And when I got into real estate, my family was like, why don't you just, you know, get a job again, go back to work if you're bored. Why do you want to get into real estate, you know? And hey, I'm with this whole Asian crowd, right? It's all about go work in high tech or be a doctor, go make money in the corporate world, because that's the only thing they know. Why do you want to sign a big loan? Why do you want to buy a big apartment? You're going to get sued every day, right? You got to do what's right for you. And then you just have to change your circle. Go find that circle of 4 or 5 people who'll support you in your mission. And, you know, it might have to be a different crowd. And this is another one I like. Fail is actually your first attempt in learning. And means effort never dies. And no just means next opportunity. So think of the time when maybe you applied for a job or applied to college. got a few rejections, but all it took was one acceptance, right? Like I applied to many colleges to come to the US, but SMU was the one that gave me the biggest scholarship. So even though they were a private school with a higher tuition, they gave me 100% tuition waiver. So to me, SMU was a zero versus, maybe something like UTD still would cost me more. So all it takes is one acceptance. Remember that. Don't let all the no's stop you. And this is another good one. Your word, you're as good as your word. Follow up with people. If you say, I'm going to get back to you on this tomorrow, find a way to put a reminder for yourself. The easiest way you're going to lose friends, lose investors, and lose trust is when you don't follow up. So don't forget to follow up if you told someone you're going to get back to them. And same with assumptions. When someone says no, it's not because they don't like you and reject you. It's because maybe it's a time in their life and what you're doing doesn't fit with what they need. That's it for all the free advice for the day.
That was spectacular. I so enjoyed hearing your story and seeing your involvement with within the Brad Sumrock group. I truly agree that having a mentor program, what I love about Brad's is it really is an ecosystem. Everybody helps each other get into deals. You can find everything you need within that mentor program. So thank you for making that connection, what has worked for you. And I would say whether it's Brad Sumrock or any of the other groups out there, what a mentor program is going to do is not only educate you, but it's going to put you in front of other people that are making things happen. And you could certainly do it on your own, or you could spend, 30, 40, 50, 100,000. Just depends on how fast you want to accelerate. And there is no one way to do it, and there's not one reason to do it. You really have to find it, what works for you. So again, Sandhya, so nice to hear from you. Couple things. If someone were to ask you, how much time are you spending on doing your multifamily investing, finding deals? Is it a full-time job? Is it something that you kind of work on a couple days a week? Can you kind of break that down for us?
Initially, when I started out as a newbie, I underwrote a huge number of deals. I love math and spreadsheets, so underwriting was a big focus for me. So I definitely went after it. And I remember the first time I tried to underwrite a deal, I had to call a coach back on the same deal 3 times before I even got to a reasonable number because I was making so many mistakes. Like I didn't even know how to properly fill out that analyzer spreadsheet. Today, when I look for a deal, I know my little box. I don't deviate from that little box. I simply look at the address and zip code and I just say pass, right? On so many deals. There's only going to be maybe 1 or 2 deals out of 50 deals that might even come close to meeting my criteria. And it's tempting. Sometimes there could be that 70 or 80 doors that's in the perfect location. But at 70 doors, it's going to be very hard to make the deal work. The larger, the better in terms of economies of scale. You want to afford a full-time property manager on site, a leasing manager, as well as a maintenance staff, right? And for you to afford that, it's very hard nowadays. Maintenance staff is hard to find. You're talking 25, 26 an hour, plus the payroll expenses and what you pay a property management company to run it for you. Their percentage also is higher on smaller number of doors. Right? So as tempting as it might be, today it doesn't fit my criteria. So I have to pass. So it's very quick for me to screen and decide on a property. So then I don't spend hours underwriting. But let's say something like Oasis Springs that I just closed 2 weeks ago came. Oh, I looked at it and I could not stop looking at it and underwriting it. I think I spent like 7, 8 hours the same day just looking at every little detail, right? Every little box in that spreadsheet. I was like, how can I get this 1 bedroom versus a 2 bedroom? What can I look at? What do I know already from Bedford Creek and Courts of Bedford and, all the other properties I have toured before in that area, right? So I went like after it like a mad woman, like literally. But I look for, my time with family. Like tomorrow, I'm a PTA mom. Tomorrow, I'm the hospitality chair. I'm feeding 120 teachers for a school lunch back to school, right? So I'm not doing any Oasis Springs work at all. Yesterday I was at Oasis. Today is my Cedar Square day, but I only like to have 2 active deals at a time. So I'm not going to be underwriting any deals for the next 30 days at a minimum till these 2 properties I feel are on track. So I see myself in September to October timeframe when Northridge Court is sold and I get that money back. And I'm like, okay, I need another place to put this. And hopefully these 2 are stable by then. And that's when I'll do it. So in that sense, for me, it goes in waves. The last 2 months before we closed Oasis Springs was hectic. There were some 16, 17-hour days during that 3 weeks of about, underwriting, doing paperwork with a lender, raising capital, doing the webinar, right? All of that. So it's not an even one, but it was also summer and my kids were home. So I got to see them anyway.
Oh, that's fantastic. Does anybody have a question? I mean, you've covered so much information here. Is anybody in the audience that has a burning question as well? Sandhya, how do people get a hold of you? Would you like somebody to contact you if they had a deal? I know that you're with the Brad Sumrock Group, but if this was something that they thought maybe you would want to take a look at, would you be open to being a sponsor outside of the Brad Sumrock Group? And is that something that would be helpful for you?
I'm open to it if it's a Dallas deal that fits my box.
Perfect.
I'm not going to spend any time in Atlanta and Phoenix, phenomenal markets as they are, just because I don't know it. So if I have to raise money, I need to really, really know what I know. So I'm like going deep into one little thing rather than broad on several different things.
Yeah, makes sense. Good.
I know my zip codes. I need to be able to hop in my car and just drive 20 minutes, 30 minutes to my properties, check on it and come back and still be able to pick up my kid from school kind of schedule.
Oh, it's fantastic.
So that's my little box.
Nice. Jeffrey, was there a question you had? Jeffrey Turchin? No?
No.
Okay. No problem. I saw you unmuted. So nope, no problem.
Hey, Julie, Moses.
Oh, Moses. Yes. Moses.
Hey, Sandhya, how you doing?
Good.
Here's the question I have for Sandhya, and she brought it up because I run into something similar. What are your best recommendation for a deal? I know you had the capital call very early on, and you may have known the individual very well prior to getting into the deal. What are your best practice as to vetting the individual, especially if they're going to be part of the GP and also have a non-arm's length relationship as to the construction and all that going on? What is your best takeaway from the experience you had?
I avoid a deal where, let's say it's a distressed property and one of the main sponsors owns a construction company and all the deals are going to get, all the construction contracts are going to get awarded to them. I read the PPM, I read all of my subscription docs very carefully, and I don't invest in such a deal. I don't partner with someone with such a deal. I need to get 3 bids on all deals and on all, shall we say, CapEx projects. And they need to be from vendors highly recommended by other sponsors I know, as well as my property management company, so that it's a very neutral, if I wear blinders, I don't know the names of the individuals or the companies, and I strictly look at the bids because all vendors are thoroughly vetted. That's the way I run my assets. So I don't do business with people who are going to make money off of construction projects on a deal.
And do you treat it any differently if you're in-house management doing the property management?
Again, if they can make money in other ways than purely working hard for the passive investors, I'm hesitant to get involved. I know a lot of people like the whole idea of vertical integration for more efficient management, and I see the benefits of that, but only because I've been bitten by this particular ordeal of someone making money regardless of whether the deal does well or not. I like to keep everything clean and separate.
Thank you.
Penny has a question.
Thank you, Julie.
Sure.
Sandra, thank you very much for all that information. It was really, really helpful, and you shared a lot of value. My question is, What would you say is the biggest reason that you didn't invest with any GPT team more than once? What was like the biggest thing that like turned you off?
Cash flow. They all project very aggressive cash flow at the beginning. And I think you need to be more realistic about it. Like some people want to advertise 10, 11% double-digit cash flow right from the beginning, and they didn't come through. And so pretty much the market appreciating got us the overall returns on many of these deals. In some cases, I love the team. I really think they're a fantastic team, but they picked a really bad location for that property just to have a deal, just to have a property. So the deal is doing horribly. And so in this case where the deal made a capital call, for example, where I really wanted to make a strong relationship, build a strong connection with this individual, I applied pressure. I started nagging them. I was like, why are you making a capital call? Why are you spending all this CapEx money? All of 2020, I was like, this doesn't make sense. Every month I have the reports to show me what is being spent, right? And they're now charging a cell phone to the monthly bill. They're charging their car payment, right? So I just didn't like the way they did business, and I applied pressure enough to where they listed the property for sale. I said, this trend is not improving. You're going to lose money. Now is the best market time right now in Houston, Texas, Dallas, different areas. Just sell. At least get us our principal back. So I'm hoping we get our principal back on that deal.
Wow. All right. Thank you.
Sure.
Artie, you're up.
All right, I know we're running out of time, so just a brief answer, I guess, to a question. For your first deal that you were a co-sponsor, what did you bring to the table?
My primary role was boots on the ground, being in Dallas, because both my partners were out of state. They also coached me through the raising capital process, so I was able to bring some capital, but there was no promise of you must raise this money to get this return, kind of any such agreement. They were really nice gentlemen, and all I wanted was the learning experience. And because of that attitude, they were willing to take me on, and I got involved in every weekly call. I showed up to the property whenever something was going on. This was my full time. I dropped my kids at school literally in the morning, and then I'd be showing up at the property, and I'd spend 4 or 5 hours at the property and then drive back in time to pick up my kids. I literally lived at that property those first 2-3 months that we took over, not because they wanted me to, but because I was so eager to learn and see how things worked without nagging the property management team, but just being available as an extra set of hands. So that's because I wanted to learn. But as far as expectations with them, it was more of, I'm here to learn, give me anything, and I'm here to ask for nothing. And so that turned out to be a very good relationship, because as I learned, I got more confident and I took on a bigger and bigger role in the asset management. And so now asset management is what I kind of specialize in.
Yeah, that's fantastic. I mean, so many people get into this, they get into one and they just think, oh, it'll run by itself. The day you close is the beginning of your responsibilities to your investors. Don't be thinking this is a get rich quick kind of scheme. You really do. And that's what I love about Sandhya, is that she is involved. And a lot of these people that you may come in contact with, they're simply there to sign on a loan and go do something else. They're not keeping their eyes on the transaction. And you're going to see a lot more of this causing, being a problem.
You know what
I like to say that it's like a marriage. And so the honeymoon is over when you close the deal. Now the real work begins. It's a marriage now, and you want to continue it for at least 5 years. So you got to work on it. It's not automatic.
What I appreciate, Sandhya, what I really appreciate is your clarity. It's like every aspect of what you're doing has such clarity. And it's crystal clear. So thank you for bringing that to the table.
Sure. Just tune out all the noise. Surround yourself with 4 or 5 people who support where you want to go in a year's time, 6 months' time. And, you just got to tune out those naysayers. Don't tell them about what you're doing. And same with passive investors. There's somebody next door who's just not going to believe whatever you do. They're going to stay with the stock market. They're going to, give in to the inflation. They're going to lose money, keeping money in the bank. That's their comfort level. Don't try to talk them into investing with you. This is right for some people. Some people may need to know about what you're doing for 2-3 years before they invest with you. So
Yeah.
just don't push it and force it. Just like, how do you feel when somebody's trying to sell you something, right? It's the same thing. Do what you want done to you when you go talk to others. Drop hints, kind of tell them this is what you're doing. If it interests you, great. If not, that's your thing. And start talking about even your passive deals.
Yeah.
But don't push anyone. No one's going to get pushed into investing with you. This is not like buying, Girl Scout cookies. This is 50K plus investment. They need to take their time, do their due diligence, do their homework. And if you already have a deal and you're meeting someone for the first time and it's a 506B like Bravo, don't do it. Give them
That's right.
examples and say, you can look at my current deal, but you are not allowed to invest because I just met you. But keep this in mind for next time.
Oh my goodness, we could be here all night, and I want to be sensitive to your time. So thank you so much for sharing. Again, your email is invest@multifamilyforyou.com. So
Yep.
if you want to reach out to Sandhya, again, making sure that we're creating value both sides, that you can maybe bring somebody to her, or maybe she can help you with something that you're working on. So thank you again, Sandhya. Amazing information, and so appreciate your time.